Hello, welcome to AQA Accounting. In this video I'll be going through a section B question, which is a cash budget question actually, merged with partnership accounts, and this is actually from the Specimen paper, paper 2. So let's get started. So we have the sort of summary of the question in terms of two partners and a third one will be joining on the 1st of July. We've got some details about the partnership agreement, which is interest on capital, 5%. We have capital balances for the three partners and how the third partner will be joining on the 1st of July. We've got some information about drawings and how they are limited to 20% of the fee income that they bring in, and that Chun, the third partner, there'll be a purchase for a car. Okay. We've got the actual data for 2 months and forecasted data for the other 3 months, and how the payments come in for these transactions for the fee income, okay, the equivalent of sales. And then we have information about the outgoings, the outflow in terms of operating expenses, drawings, some information about the overdraft and the bank balance. Okay, so that's the information that we have. What we also have is, this is our template for the cash budget. So we've got a 14-mark question, and that's the template for budgets. Okay, so in terms of the actual question, let's make a start. So what we want to do is, we've got the template for 2 months. So I'm just going to draw this up on the right hand side, so July and August. Okay, and the question is, prepare the cash budget for Alan, Bashar and Chun. These are the three partners. Okay, so we've got months of July and August. Now, in terms of the actual format, there are the number of months, which are your columns, and in terms of the row, what we're going to have is, we're going to have generally 3 sections. So we're going to have a section for receipts, which is the items that are coming in. We're going to have a section for payments. And then we're going to give it a little bit of space, and just to make sure I can actually get all of this in, I'm just going to make a mark just to see that I've got enough space. So we're going to leave the last few lines. So we've got the opening balance, net cash flow, and our closing balance. And you can do this slightly differently, where you can have net cash flow, opening balance and closing balance. It doesn't necessarily have to be in that specific order. Like I said, you can have net cash flow, opening and then closing. Okay, so that's our format there. Right, in terms of the question, the first thing we're going to do is the receipts, the money that's coming in. So we've got the data over here. So we're focusing on the month of July and August, which are these 2 months over here. Now the question says, clients are invoiced as soon as the work is completed. 25% of the clients there will pay immediately. So in the month of July, the partners, this is the income that they're going to bring in the month of July. Now it says 25% of the customers, of the clients, will pay immediately, which means 25% of that 36,500 will pay immediately. Okay, so if you were to get your calculator, and because I can't show everything in here, I'm just going to do a talk through, and you can make notes of the workings. But what we're going to do here is 36,500 times 0.25. Okay, so 25% of that is 9125. That's going to come over here. Okay, and that's fee income, which is immediate. Okay, now obviously in the month of July we're going to get 25% immediate straight away. But also from the month of June, it says 50% will pay within 30 days. So the sales that we have in the month of June, 25% will pay straight away in the month of June. Some of the clients in the month of June will pay in the month of July. Okay, so for each month, you will have customers that will pay in that month. You will have customers from the month before that will pay in the following month, 50%. So June, £38,000. If you half that, that's 15, that's £19,000. So £19,000 will come in the month of July from the month of June. So this is fee income, 1 month, meaning 1 month of credit. Okay. Then you have, so 25% immediate, 50% the month before. What about the rest? The rest is 25% from the month of May. Okay. The remaining clients, remaining meaning the 25%, will pay within 60 days. So May will not pay in June, they will pay in July. 2% of this will not pay, and that's regarded as bad debt. That's a non-cash transaction. It's not going to affect the expenses section. Okay, it will affect the receipts section where the money will not come in. So if you've got a calculator, £47,000, which is here, work out 25%, 0.25, gives you 11,750. Now 2% of that will not pay, so minus 2%. And you get 11,515. So this is the fee income, okay, that's coming in 2 months. Okay, now let's do the same for August. So you can pause the video if you want and have a go yourself. Okay, I'm just going to talk through this. So in terms of August, £28,000, 25% is coming in straight away. 28,000 divided by 4, so 7,000 is coming in straight away. 1 month, we've got so we've dealt with that. 36,500, 50% are going to pay in the month of August. So people that buy in July, half will pay in the next month. 50% will pay within 30 days, meaning next month. So we can half that. 36.5 divided by 2 is 18,250. Okay, and then you will have people from June who will pay in August, not July. They will pay in August. 25%. So 38 divided by 4 is 9,500. But 2% will not pay. So take 2% off, and you have, I need to do that again, 38 divided by 4 is 9,500 minus 2%, okay, which is 9,310. So very simple. People will pay in the month, 25% will pay in the month, 50% will pay the month before, and 25% will pay 2 months before, okay, minus the 2%. Same for August. People that buy in August will pay in August. People that have bought in July will pay in August, and people that have bought in June will pay in August less the 2%. So that's our data there. Okay, now we've got to look for any other forms of receipts, meaning money coming in. Okay, and the only other one that I can see is probably the third person that's going to join the partnership. They're going to join and they're going to bring in 15. So Chun will join and they will bring in £15,000 in the month of July. So 15,000 is coming in, and that's the capital from Chun. Okay. So I think that's pretty much all the receipts. Okay, so we can total that up. Okay, let's move on to the payment section. So we have probably look at points 1 to 5 and then have a look at any other additional information. So in terms of operating expenses, they are 31,425. So there isn't anything to do apart from that, just writing it in operating expenses. Okay, 31,425, 31,425. Okay, number 3, it says, in terms of drawings, Alan intends to withdraw the maximum he can in June, July, August. Now it says over here that they have a 20% limit. So Alan's going to maximize 20%. So let's write down drawings. Okay, and we're going to separate this. So we're going to write Alan, who's taking, Bashar, who's taking, and Chun is not. So we're only going to have 2 lines, one for A, one for B. Alan's maximizing the full 20%. So in the month of July, Alan's sold or generated £15,000. 20% of 15, 3,000. In the month of August, he's generated 12,000. 20% of 12 is 2,400. Okay. Now, Bashar's taking 15%. In the month of July, 16,500 times 0.15 is 2,475. Okay. Now it says over here, Alan maximum June, July, August. Bashar in June he's going to take 50% and July, none in August. So we're not doing the month of June, so we don't need to worry about that. July we've done. August he is not taking anything. And for Chun is not taking any drawings whatsoever. So that's number 2 done. Let's look at the overdraft. Now, in terms of the overdraft, it says the bank have agreed to provide an overdraft of £40,000. The interest is 10% variable. In order to prepare the cash budget, the partners have agreed to calculate the interest charged based on the closing balance of the previous month. Now, in terms of the overdraft, what we would need to do is the overdraft will probably start in the month of July, and there'll be a calculation for interest in August. Now, just having a look to see if there's any other information about that. Okay, so I think that's pretty much it. We'll use that information in the next point. What we'll do is we'll just put the figures in for the bank balance. So in terms of the budget, because the budget is from July, the budget is July and August. Point number 5 mentions that the partners expect the bank balance at 30th June to be 6860. So that will be the opening balance. That's the end for June. That will be the opening balance for the month of July. So that 6860 will be over here. So that's the opening balance. Now, in terms of any other transactions for payments, we'll just have a quick look. So operating expenses we've dealt with the drawings. They've mentioned about interest and capital over here. Now, interest and capital is a transaction that will affect the current account for the partnership. It won't affect a budget. Okay, the only thing, and this is a question which they've not done previously, but in this question you have cash budgets and you have partnership accounts. The only transactions that will affect a cash budget as far as a partnership account is concerned is drawings. Drawings is what the partners will take out from the company. Interest on capital will not affect the cash budget. Interest on drawings will not affect the cash budget. Okay, so those transactions are there just to confuse you. You can ignore them. They will not affect the cash budget. They will affect the current account of a partnership. So you can ignore that bullet point over there. Okay, you don't need to calculate any interest, etc. whatsoever. It doesn't affect the cash budget itself. we've dealt with the drawings figure over there. In terms of that transaction over there, that's something that we've missed, which we'll put in. So that's the partnership will purchase a car for 45 in the month of July, so we can put that transaction in there. So that's 45 non-current asset purchase. Okay, so that's all the transactions that we need to do. What you can do is just work out the net cash flow, the receipts, minus the total value for payments. Now, in terms of the last point, which is point number 4, once you've calculated the total receipts for July and for August, and you've calculated the total payments for July and August, I would probably leave one box there just empty. And the reason for that is because we've got an interest charge. Okay, so whenever you're working through budgets, you can work through, put all your receipts in, put all your payments in. If you get something like this in terms of interest charges, you need to identify which month it's going to affect, and you probably want to start off with 1 month, work that one out, and then move on to the next month. Okay, so we've calculated the total for receipts, we've calculated the total for payments, we've got net cash flow, we've got more outgoings than incoming, and our net cash flow figure is 27,260. Okay, so the steps for the budget are: complete your receipts section, complete your payment section, see if there's anything else that you need to do before you start totaling it off. Okay, now if we've got 6860 positive, we've got net cash flow which is negative because we've got more going out than what's coming in, we've got a closing balance of 2,400. Okay, and that's going to be an overdraft. Now, what they've mentioned over here is the interest is 10% on the overdraft at the end of the month. Okay, so if you've got a calculator and you put 20,400 in there, and then you times that by 10%, and then you divide it by 12, because interest is charged on a monthly basis, that's going to give you £170. That's the interest charge for next month. Okay, so in terms of your receipt section, we've calculated those 3. In terms of your payment section, we've got the 2 transactions there, plus the 170, which equals to 33,995. Okay, and then you can work out closing balance is the opening balance for the next month. We've got 34 coming in, 33 going out, so we've got just over £500, okay, as net cash flow, which is positive. And then we have a closing balance of 19,835, okay, and that's your opening balance plus the net cash flow, okay, or minus if it's a negative. So that's pretty much the end of the question. I'll do a quick run, just a quick review of the question, what to look out for. So this first section is quite typical. They'll always tell you there are some that are immediate, 1 month, 2 month. You just need to get your head around that and don't get that too confused with the months. Pay attention to any capital coming in, any one-off income coming in. They'll always give you something easy like that. That will probably link up to the OF marks. So make sure you include even the basic expenses. A lot of students leave them out. In terms of drawings, obviously have a look at the fee income and make sure you pay attention to the months when they are taking, what they're taking, what percentage they're taking, what the limitations are of how much they can take. And then any other odd transactions, high value transactions you need to consider. Okay, this interest transaction here is a little bit, it's a bit woolly, it's not completely clear. But what we do know is there's a 10% charge, and it says in order to prepare the budget, they've agreed to calculate the interest charge based on the closing bank balance of the previous month, which means they can only charge the interest in the month after. Okay, so if you have an overdraft, remember they never had an overdraft at the start of July. They ended up with an overdraft at the end of July, which means the charge happens in the next month. Okay. Now with banks, what they will probably do is charge you in the same month, but in this question, this is the one. Sometimes there are some questions which are not completely crystal clear, and this is probably one of those areas. Okay. Aside from that, that's pretty clear, and you know, all of these transactions here are straightforward. It is what it is. You calculate the drawings based on what they take, and then you just put the figures in: opening balance minus net cash flow equals closing balance, or plus if it's positive. Your closing balance becomes the opening balance for the next month. Your net cash flow is the difference between receipts and payments. Okay, same receipts and payments difference. They are what they are. That is what it is. Nothing difficult there. That is based on the closing balance, 10% divided by 12. Once you've done that, you can work out your total, your net cash flow, and the closing balance, and that's pretty straightforward. So if you were to be tested on a cash budget, it probably is the least of your worry. It can't be that complicated. Again, in this question, they're trying to make students feel uncomfortable by putting in. None of this has to do with. This has nothing to do with partnerships. This looks a bit different because it's 3 people, but at the end of the day, it's revenue coming in. So don't let that put you off. The only thing they've made it confusing is through partnerships. They've put that information there, and what they're expecting students to do is to calculate, waste time, calculate interest on capital and put it in. Okay, that's not what happens. That will go to appropriation account. It will go to their current account, and if they want to take that interest out, they will do it in the form of drawings. Okay, that's what they will do. So partnership transactions stay in the current account. If someone is going to take money out, they take it as drawings. That is what affects the cash budget, nothing else. Okay, so that's something, a key point to remember. And again, it's something new which they've tried in the new specification for accounting, and that's what AQA will do. They will try and mix. This is called synoptic assessment. Putting in merging topics together with each other to try and sort of get the most out of their assessment objectives, and to test students' abilities, and to try and push make the course more challenging, I guess, for students. But that's pretty much the end of the question there. I hope you found that useful, and stay tuned for more. Thank you for watching.